This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. A positive lead-in for Asia as a tech rally lifts Wall Street despite warnings from big banks that sent financial stocks tumbling. Brent crude futures slide below $70 as oversupply fears deepen amid weak demand from China. Plus, investors weighing political risks as Kamala Harris and Donald Trump prepare to square off in their first TV debate. We're live in Philadelphia. Before all of that, we do have some data crossing the Bloomberg when it comes to the key jobs component of the South Korean economy. We are seeing that unemployment rate on a seasonally adjusted basis for the month of August coming in at 2.4%. That is actually much lower than expectations of 2.6% and a tick lower than the prior reading of 2.5% there as well. We are also sort of watching the potential signs of a softening when it comes to the labour market. Manufacturing and the construction sectors really seem to be cutting more jobs, but we're seeing that headline unemployment rate actually falling to 2.6% against expectations, 2.4%, I should say, against expectations of 2.6% there as well. So we're still looking at that 2.6 sort of level below the average since about 2020, which is held at about 3.2%, but potentially seeing a little bit of upside pressure when it comes to consumer prices. So Bloomberg Economics saying that the current level of job creation is mostly coming from that services sector. The question is, of course, whether we potentially see some of those labour strikes, Shery, that have happened in the manufacturing sector continue to play out in these headline numbers.
And we'll be watching really bank lending to households in South Korea later today, right? Because it's a very heavily indebted economy, and that will really, decide what the BOK does from here. But take a look at how we're setting up in the Asian session, because we have the Nikkei already at the lowest levels in more than a month. We have seen 6 sessions of losses, and we continue to see the downside pressure on Nikkei futures. Sydney futures pointing to the upside of about 0.1%, but really the focus on what happens with central banks. We heard from sources telling Bloomberg that Bank of Japan officials see very little need to move and hike rates next week. This was sort of expected by economists. We have already heard officials really focusing on financial volatility in the markets. And really, it's all about volatility, isn't it? Because we do have, of course, a presidential debate coming up in the U.S., the November elections. Take a look at how U.S. futures are setting up, because we had 2 big moves in the markets. A tech rally being led by the likes of Tesla, Oracle hitting a record high. On the other side of the trade, we also had financials leading a slump. We continue to get more pessimistic outlook from these big U.S. banks. So we had those 2 big moves, the Treasury rally continuing, and of course, it's all about how we're setting up for U.S. CPI numbers as well. I mean, markets not expecting such a big move like we get with the labor market print these days, but options traders now seeing potentially almost a 1% move in either direction when it comes to the S&P 500, Haidi.
Yeah, and Shery, the thing is that the sort of expectations of jumbo-sized moves, maybe not before the election, but certainly those expectations are still set, right? Bets set about for 150 basis points by the end of February from the Fed. That's ahead of course, as you mentioned, the CPI print due out a little bit later. Forecasters are expecting another month of muted price increases. Bloomberg Economics says that will give the Fed an opportunity to go big. Let's bring our Bloomberg executive editor for Asian markets, Paul Dobson. Go big, but the question is the timing now.
That is what people are starting to factor into their considerations. Of course, the big debate is whether the Fed will go with a 25 basis point cut or a 50 basis point cut in September. But some of the narrative seems to be tipping to that idea that they could start 25 but then accelerate if the data deteriorate further and do 50 basis point cuts later in the year to be a more aggressive in terms of that cutting cycle. I think inflation is a consideration, but not the only consideration now, because there's so much focus on the labour market, and that's why the market expectations for reaction to this CPI figure are perhaps lower than they would have been a few months ago. I think I saw a tweet at the start of the week saying it's CPI week, but the magic has gone, and there's other things for us to worry about right now, not least of which will be the election debate coming up a little later today.
Yeah, we continue to watch for election risk, but also the bond market rally continuing and perhaps a tips market really signaling that the Fed might be going too slow?
I think that when you look at inflation expectations, what it's telling you is that the market is pretty confident in that glide path, the idea that CPI is coming back in towards the Fed's goals. Now the risk seems to be tilting a little bit more to the idea that actually inflation is going to come down too quickly and go below the Fed's target at some point. Both on the one-year swaps, there's some pricing in there for the idea that CPI will continue to fall and go below Fed estimates. And on the longer term, the break-even rate is also showing that now the market is starting to price for that long-term core PCE, the Fed's preferred measure, to be below 2% in the long run as well, which I think is really interesting. You know, for so long we've been worried about too high inflation. Now there's just that outside concern about too low inflation. Now there are some other factors that feed into this, not the least of which is this big slide in crude oil prices that we've seen recently, which is pushing down the price of fuel and should therefore be beneficial, depending on your view for the inflation outlook, should bring it down in any case, and the rest of the energy complex and energy costs as well. And that's something the market watchers and break-even or inflation traders pay particular attention to. But it's those other things, those other sort of slight nagging doubts now in the economy about consumers being able to afford the cost of living, the rising amount of defaults on debt, the worrying sort of the amounts of borrowing that are coming through now. There's also starting to catch people's attention and just make them a little bit more cautious about that long-term inflation outlook.
Bloomberg executive editor for Asian markets, Paul Dobson there, and all of those economic concerns that he just mentioned, of course, will be discussed today. Donald Trump and Kamala Harris set to take the stage in what could be their only face-to-face debate before Election Day. For more, let's bring in Bloomberg White House correspondent Akela Gardner. Akela, so this debate perhaps not as immediately consequential as the June debate between President Biden and Trump, but how high are the stakes for both candidates?
Well, the stakes are incredibly high for Kamala Harris because so many voters are still getting to know her. She's only been on the ticket for a couple of weeks now. So she's really introducing herself to Republicans, to independents, people who maybe did not watch her speech at the Democratic National Convention just a few weeks ago. And she's really going to have to establish her record, her time as vice president, her time as prosecutor in California, as a senator in Congress. And they're really going to be taking a second look, some people who are maybe not convinced totally by Donald Trump and still interested in other options.
As we've sort of mentioned already, voters pretty much have an opinion on Donald Trump. He's sort of, in a sense, despite his, some of his sort of inconsistency and the unexpected moments, is pretty much sort of a known quantity, right? In terms of the policy priorities, what will voters want to hear from Kamala Harris?
Well, Harris has really spent weeks rolling out her economic policies. She's put out a housing policy where she's giving voters a incentive of $25,000 if that is passed. She's also done this child tax credit that could give families a $6,000 child tax write-off. And she's trying to contrast with Donald Trump's economic vision. He wants to do a tax cuts for the wealthy, something that economists say could potentially increase inflation. But voters still trust Donald Trump more on this issue. So she's really going to have to prove herself and really contrast her vision with Donald Trump's.
Are we expecting any surprises? And I'm thinking perhaps what happened in 2016 when Trump went against Hillary Clinton and then he brought forward these women who leveled sexual assault and harassment accusations against former President Bill Clinton. Could we see something like this unfold today?
Well, for one, there's no audience today, so I don't think that we're going to see anything like that. This is a very interesting debate. One, there's no audience, and also the candidates are going to have their mics muted while the other is speaking. This is rules that was really carried over for Donald Trump's and Joe Biden's debate, but the Harris campaign really pushed hard against. They feel like it puts her at a disadvantage. She's a prosecutor. She feels like she wants to be able to fact-check Donald Trump in real time and respond to some of these attacks that he's going to be having against her, but she will not be able to do that. Something I'm also going to be watching is Donald Trump and Kamala Harris have never met before. Will they have a handshake? Donald Trump and Joe Biden did not. And so we're certainly going to be watching to see if that is something that returns to the debate stage.
Our Bloomberg White House reporter Akela Gardner there in Philadelphia as we await that first debate. Coming up on the Asia trade, Pepperstone's head of research joins us to talk about how policy signals in today's presidential debate could influence market volatility. We'll also be hearing why the Asia Society Policy Institute believes that China brings Republicans and Democrats together. Plenty more ahead. This is Bloomberg. Take a look at how markets are really preparing as we get into a day that holds that first presidential candidate debate there. We are seeing a little bit of bifurcation when it comes to major markets coming online in about 45 minutes or so. Sydney's up by about 0.1%, but broadly we are seeing some weakness, really Asian stocks eyeing declines on the back of that US session. We saw tech firms in particular just countering that slump that we saw heavily weighed in financial shares. Oil will be one to watch with some of the oil producers as well as broader commodities names in the Asian session as well. Crude regaining some ground after really driving the commodities index to the lowest in more than 3 years. Chicago Nikkei futures looking very much like it's trading sideways at the moment, and S&P futures perhaps unsurprisingly, given that we're also looking into the US inflation print as well. So a lot of uncertainty. Let's get some perspectives with our next guest. Chris Weston is a head of research at Pepperstone Group. So it's a lot for markets to contend with. And I'll start off with sort of the near-term event risk, right, which is the presidential debate. What are you watching out for, particularly when it comes to policy clues that could impact what the Fed does?
Well, I think Kamala Harris is going to clearly use this as a stage to galvanise her as a strong and charismatic leader, and I think, I think on the other hand, you're going to see Donald Trump looking to sort of push it back towards the economy and really focus on his plans for the economy and obviously how the economy's fared under Joe Biden and how it's likely to fare under Kamala Harris. So. Yeah, I think there's a lot of focus there, maybe a bit of a touch on immigration and the record that's been played through there. But whether this turns out to be a volatility event, I'm somewhat sceptical about. I think the market really wants to see, obviously either someone slip up to see some sort of move in the markets, or we see a clearly dominant performance that alters the polls. But I think it's when the polls do shift that people can start pricing risk. And I think this is now the time where market participants will start to look at expressing Trump trades or election trades more liberally. I know we've still got to contend with, obviously, these macro dynamics which are unfolding and the uncertainties which are clearly brewing. But I think we're going to start to see people to look to start putting a bit more size into some of the Trump trades or the election trades going forward. I will say that it's really around this point in 2016 and 2020 that we did see the Democrat candidate leading and pulling away in the poll. So if there is a form guide to be said, maybe the stage is set now for Harris to push ahead. Obviously, we've seen that the New York Times Siena poll recently came out earlier this week that suggested 28% of respondents want to see or know more about Harris. So if she can be a bit more transparent in terms of her policies and sort of resonate with the still undecided voters, maybe she can get some sort of traction in the polls. We'll see what happens. Obviously, it's very close at the moment.
It feels like concerns about a resurgence in inflation seems to be kind of more of a tail risk at the moment. We're seeing still options rates markets pricing in at least a half-point cut by the end of this year, but that's probably not going to come before the election, right? Do you think markets are going to be disappointed with the way that the Fed manages this part of the easing cycle?
Well, that's a real risk. I mean, my personal view is that I don't think where inflation is at the moment and the labour market trends really should have too much bearing on whether the Fed ease at this meeting or 50 basis points at this meeting or the next meeting. I feel if they've got the capacity, they should just go and do it now. I don't think it's going to have any bearing on the voting public. I don't think it's going to have any influence on that whatsoever. So if they feel like they should do it, they should go now. And I think that they do have enough ammunition to ease by 50 basis points at the coming meeting in September. But I feel like on balance, I think if you look at the rates pricing, we've got 30 basis points of cuts being priced for the September FOMC. And I think most people, the rates markets and the swaps markets, clearly telling you that the sort of the majority of voters, the consensus of voters, are still sort of leaning in towards that 25 basis point camp. Perhaps get the next payrolls number. I think that comes out on the 4th of October, and then they can maybe go 50 basis points in the following meeting, and then another 50 basis points in December. Maybe that's the issue if the payrolls is weak. But I feel like on balance that there's definitely enough there for them to cut 50 basis points. So I think that would be the policy of least regret. But I think most people are probably right. That 25 is probably the way they'll start.
How closely are you looking at the financial sector in the U.S.? Because it was really interesting to see that despite the fact that those proposed capital requirements were actually cut and confirmed by the Federal Reserve, we saw the big banks in the U.S. just slumping on the economic outlook and more pessimism coming from the leadership.
Yeah, I mean, look, banks have done very well recently. I mean, they've been a place which investors have been looking to chase, and you've seen that in the XLF and the KBW Banking Index. And yeah, like I think the original proposals to address the capital issues to make sure that SOFR spreads are ultimately ring fenced. We're sort of less onerous than what was originally proposed of 90 basis points. So it's certainly come back in. I think what we did see is good buying coming through in SOFR last night, and we saw obviously front end Treasury yields dropping a bit, but I think that's probably more a reflection of what we're seeing in the energy markets in gasoline and crude. I think what we've been seeing in the corporate landscape over the last week or so is not particularly pretty. And we've seen that in the automakers in Germany. That looks quite concerning. We saw that in one of the big auto credit companies in the US last night, talking about credit deterioration and loan demand. And of course, then you've got the JP Morgan president coming out and suggesting that their interest margins may not be as compelling as what analysts had been previously saying. So I don't think this is necessarily just the banking space. I think there's a whole raft of different corporate spaces which leverage the sort of consumer demand, which is falling away. And I think, again, it just sort of adds to the malaise we've been seeing in the risk picture, that things are slowing down. And I'm not sure if necessarily equities and risk assets are fully pricing what we could be seeing.
Chris Weston, Head of Research at Pepperstone Group, with us as we head into that first presidential debate in the US. We do have some breaking news when it comes to a potential corporate approach there. We're hearing with regard to the real estate listing provider in Australia, REA Group, their approach to Rightmove in the UK with an initial takeover proposal that had, of course, confirmed their interest in the UK's biggest property portal by market value. We're now hearing that the REA Group's cash and share offer values Rightmove at about £5.6 billion, saying Rightmove holders to own about 18.6% in the combined group under the proposal. That is a non-binding indicative proposal to Rightmove. So that is the update that we're getting. REA Group is, of course, part of the Murdoch empire. A preliminary proposal was made back in the early part of September. We have now seen some early contact now. It's unclear what Rightmove's reaction to the offer will be, so we'll continue to watch for a response there, Shery.
Right, Heidi, and of course we're following the economy in China because a deepening sell-off in Chinese stocks is now worsening a crisis of confidence in the world's second largest economy. This is, of course, adding to pressure on policymakers to halt the downward spiral. China correspondent Min Lo joins us now. Min, we have seen the CSI 300 really headed towards that fourth year of losses. What's the outlook from here on out? Because the economic data, at least from Beijing, doesn't look that great.
Yeah, look, the CSI 300 is now close to the lowest level since January 2019. It's lost close to 7% of its value so far, and this is despite state-backed funds pouring in about $66 billion to buy up ETFs to prop up the stock market. And what's really triggering this sell-off is the series of very weak macro data that came out this week. You had the trade data yesterday, imports not looking very promising, exports remaining the only bright spot that is cushioning this weakness in the economy. But even even that is facing headwinds. But what's most worrying is the inflation data. Both CPI and PPI continue to disappoint. And if you look at the core inflation, that has cooled to the weakest in 3 years. And increasingly, there's this fear that China is trapped in this deflationary cycle. We are already seeing signs of that with salaries flatlining, entry-level salaries in certain government-favored sectors like electric vehicles down about 10%. So causing consumers to really hold back on spending despite the measures that we have seen so far from the government. And the fact that it seems like more stimulus policies is not really forthcoming, that's really spooking investors as well.
We're also seeing that there might be signs that the PBOC could have intervened in the bond market again.
Yes, that's judging from the volumes of deals that we saw yesterday. The PBOC could have sold more of the 10-year special sovereign note because there were more than 250 batches of those that changed hands by Tuesday afternoon. That is more than 3 times the volume of deals on Monday and about 8 times the volume on Friday. And this comes as yields again plunged to record lows on those weak economic data and also expectations that PBOC could cut rates at least after the Fed cuts maybe in September. And also you have the PBOC saying that last month they did sell those the longer-term bonds and bought up short-term bonds in an effort to really steepen the yield curve. Local financial media is reporting that the PBOC is likely to continue to intervene more actively in the bond market to try to put a floor to the bond yields and to dampen these speculations.
Bloomberg's China correspondent Min Lo there in Hong Kong. More ahead on the Asia trade. This is Bloomberg.
The analyst consensus is a drop in NII of 1.5 billion, from 91.5 to 90. That is not very reasonable, because the rate expectations is lower by 250 basis points. So I think that number will be lower.
JP Morgan President Daniel Pinto and Haidi with that more pessimistic outlook. We saw JP Morgan really falling by the most in more than 4 years. And the concern around financials in the U.S., of course, is not really only about JP Morgan, because we heard from other banks as well, including Bank of America, saying that investment banking results would come in lower than some of Wall Street expected. So it was interesting that despite the fact that the Fed confirmed that they will be cutting higher proposed capital requirements in half for the biggest firms, the bank index actually fell 2%.
Yeah, that was what was sort of interesting to me, because when we woke up in Asia this morning, you were expecting to see kind of the rally, right? Just sort of this win that they've had when it comes to those capital buffers. But no, that was really spoiled when it comes to the dimming outlooks with, as you mentioned, JP Morgan really leading the banks in the downside there, tighter margins, struggling borrowers sparking warnings by some of these big banks, and all of this sort of tempering the enthusiasm after the Fed so that they would, sort of moderate these toughened capital rules. So a pretty jarring kind of picture there when it comes to the banks. More ahead in the Asia trade. This is Bloomberg. Fair degree of caution, and unsurprisingly, given that we do have some economic risk going into US CPI print, the implications for the Fed, interest rate options markets now pricing in some jumbo cuts, but certainly not expected before the US election. We are seeing a little bit of a mixed picture, perhaps some modest gains expected to come through from Sydney, but certainly for the rest of Asia, we are seeing Asian stocks eyeing declines and a pretty weak open. The tech names could sort of outperform. They countered that slump broadly in US banks and financials as well. Also watching energy stocks after we had oil dragging the commodities index to its lowest in more than 3 years, that falling below kind of quite a key number, but now sort of regaining some ground, Shery, but a lot of political risk in the next few hours.
Yeah, as we're seeing Kamala Harris and Donald Trump really taking the debate stage in potentially their only face-to-face showdown with less than 2 months until Election Day. They're both searching to gain a convincing lead in battleground polls, and the challenges each faces to secure that edge are starkly different. Let's discuss the geopolitical implications, especially when it comes to tariffs and trade. Bring in Wendy Cutler, Vice President at the Asia Society Policy Institute. She previously served as the acting Deputy U.S. Trade Representative. Wendy, always great to see you. It's been interesting to hear some of the policies from Kamala Harris because we still have to get a lot of clarity, especially when it comes to trade. But from what we've seen from the Biden administration, it wasn't necessarily that different on its approach to China when it came to tariffs and trade. Where do you see this going depending on who wins here?
So with respect to trade, I expect Kamala Harris to largely follow President Biden's policies. I do not see us adopting a robust market opening trade agenda. She has union endorsements. It will be her first term. The Democratic Party remains divided on trade. So I think she'll take a cautious approach and one that will also focus more on benefiting workers and not corporations. With respect to Trump, we keep hearing more about tariffs and trade deficits. So I expect him to continue what we saw in the first term and really focus on countries with large trade deficits, impose tariffs, and try to get them to make concessions to the United States in exchange for removing the tariffs.
When it comes to the format of engagement with all of these trading partners, I mean, we saw the difference from previous administration, whether it was the Biden administration or the Trump administration, to veer away from these mega dialogues on trade like CPTPP, for example. What can we expect in terms of different frameworks to address some of the issues, especially across Asia?
I think what we're going to see are kind of ad hoc groups of like-minded countries working on specific sectoral or discrete issues. So whether this be supply chains and critical minerals, whether this be focusing on the nexus of climate and trade, these are the types of issues I could see where progress could be made, particularly under a Harris administration. In a Trump administration, if he starts off by imposing tariffs against our trading partners, I think the appetite for cooperation will be diminished. And we'll be getting back into some adversarial relationships with countries where we have been working closely with during the Biden administration.
We've long sort of been trying to read the tea leaves on who Beijing would prefer, right? Do you have a good read on that? Because we know that even if the sort of policy detail may not be that different, the method of engagement is certainly perhaps more consistent under the Biden presidency and potentially, one would assume, a Harris presidency.
Yeah, and I could argue it either way. I think both. Look, I think we're at a point where our relationship with China is strained and tense, and regardless of who comes to the White House, we're just going to have to accept that reality. So the question will be how each president proceeds and whether they want to at least have some limited engagement with China, whether they want to manage the relationship, or whether they want to kind of take China on and intensify efforts to decouple and to work less and less with China. But we'll have to see how this works out.
One of the thorny issues will be the fact that President Xi has clearly made front and center to his economic recovery plan these issues that nations like the US and, of course, European allies say are subject to extreme overcapacity. Do you see that changing, or does that just continue? And how much further, I guess, bifurcation do you see in this element of the trade relationship and the tech relationship between these two sides?
I believe the overcapacity issue is going to hit either president right away when they take office. I mean, it is a huge problem right now. We just saw China's August trade exports going up by almost 9%, while imports rose by less than 1%. This just contributes to China's global imbalances, which are continuing and frankly are being met with resistance not just from the U.S., but from other allies and partners all around the world. So again, I think this is going to contribute to overall trade tension, but not just bilateral trade tension. This is a challenge to the global trading system, trying to absorb China's subsidized goods that are being produced and exported at unprecedented levels.
We've seen anti-dumping probes. We've seen sort of, efforts to respond to sanctions and retaliations. What are the responses that are sort of still in the back pocket for Beijing? And I guess when you talk about the broader trading system, particularly here in Asia, is there anyone who's set to benefit from these tensions?
Well, again, I think Beijing is going to have to figure out whether it can continue with this export strategy, particularly if countries push back, including in Southeast Asia and all around the world. Personally, I think that the answer is that China needs to restrain its exports and find ways to stimulate its domestic demand if it wants to address these problems.
Wendy Cutler, always great to see you, Vice President at Asia Society Policy Institute. And of course, we're following really electoral risk here in Japan as well. A front runner for Japan's top job, Shigeru Ishiba, has pledged to move quickly to put together measures to help the country escape deflation and boost growth. For the latest on the race, let's bring in Japan economy and government reporter Alistair Gale. Alistair, I mean, it's becoming a very crowded field. How much visibility do we have about who could become the next prime minister?
Well, the honest answer right now is not a lot. I mean, this is, as you say, a crowded field. We're expecting another candidate to throw her name into the hat today, so we'll probably have 9 candidates, maybe even more. And what's interesting is we're seeing less of the control of the kind of party bosses in determining the outcome. So it really is an open race this time. So yes, the campaigning starts tomorrow, and we'll see how that goes. There's some jostling, on policy details, but a lot of this is about who can sort of present a fresh image for the party, because it's had scandals in recent months and it's now trying to refresh itself.
You and I last night were speaking to one of those candidates, Mr. Hayashi, right? It was really interesting to me to hear him talk about how busy and how sort of challenging it is to sort of maneuver between his current job, which is Chief Cabinet Secretary, and having to be a candidate at the same time. And he's not the only one. How are they all trying to do their jobs, campaign, and trying to manage it all and differentiate themselves from each other?
Yes, it's really interesting. I mean, a lot is happening behind the scenes, because, of course, this is an election which is decided within the LDP. It's not something that, the average Japanese person gets a say in. So they have to do a lot of maneuvering to get support from other people inside the LDP. They need to kind of get the nominations first to become, to officially declare to become a candidate. So someone like Hayashi-san, who we spoke to last night, we were talking about how much sleep he gets, and he said he was doing okay, but I'm not sure he's too honest on that, because they obviously have to put together policy ideas. They have to, they're starting to give speeches. So there's a lot of time that is consumed in the, in the process of trying to become the next leader.
I was shocked when he said he was getting 7 to 8 hours of sleep every night. Having just arrived in Japan, I was trying to figure out what the logistics of this whole endeavor would look like, right? So what will the next few days look like when you have campaigns starting tomorrow, but then the elections, as you said, don't necessarily involve the general public. They're done within the LDP.
Yeah, it's very interesting. I mean, what we're going to see in the next couple of weeks is the candidates will be going around the country. They'll be doing kind of joint appearances in all parts of the country, trying to appeal to voters. What they're doing is they're putting forward, each of them is putting forward ideas about how to improve the livelihood of the average, Japanese person. But the interesting thing is, as I said, is this is not an election that the Japanese people get any kind of input on. So, what they're trying to do is show that they are the person that can connect with the Japanese public, so the party can then decide, well, this is the person that we want to take us into a general election, and we are expecting an election sometime maybe later this year or early next year. So it's kind of like a two-track process where they have to work within the party, but they also have to show that they have an appeal to the public in general. So there's a lot of activity going on. Next couple of weeks is going to be very interesting. We'll see how it shakes out. We'll see if there's any front runner. There's a couple of people right now. We're talking about Ishiba Shigeru and Shinjiro Koizumi, are the front runners, at least in terms of kind of public views on who they think might make a good prime minister. But that could change.
Alistair Gill, good to have you with us, Japan economy and government reporter, as we, of course, Haidi, were setting up to the presidential vote inside the LDP on the 27th, and perhaps if the momentum continues, even a general election later in the year.
A lot of political headwinds for the rest of this year, right, Shery? Take a look at some of the other stories we're following, and Israel has proposed giving Hamas leader Yahya Sinwar safe passage out of Gaza in exchange for the group freeing hostages and giving up control of the Strip. This comes as doubts deepen about the two sides' ability to reach a ceasefire. Israel has also said that its military probably killed an American-Turkish citizen by accident, prompting the US to call on its close ally to make fundamental changes to how it operates in the West Bank. Secretary of State Antony Blinken has signalled the US will consider Ukraine's use of Western long-range weapons against Russia after confirming Moscow has received shipments of ballistic missiles from Iran. The transfer represents a deepening involvement by Tehran in the war. The US currently opposes Ukraine using long-range weapons, previously citing concerns about possible Russian escalation in response. Some big moves across the commodities complex, in fact, at one point being dragged to the lowest in more than 3 years on account of the sell-off that we saw in crude. But we are seeing something of a stabilization. Oil seeing that rebound after the global demand concerns really culminating to trigger that rout. It is a pretty modest rebound, though, collapsing to its lowest close since late 2021. We had an industry group flagging another drop in US stockpiles there. We're seeing New York traded crude up by just about 1%, but certainly well under that $70 level for Brent, still off by 3.7%. This after the American Petroleum Institute estimated that commercial stockpiles in the US fell by almost 2.8 million barrels last week. We're getting official data on inventory and demand a little bit in the Wednesday session as well. Take a look at iron ore. We're seeing a little bit of upside there by about 1/10 of 1%, but of course that China weakness continues to weigh heavily on these industrial commodities. More ahead on the Asia trade. This is Bloomberg. We are exactly 2 months away from the annual COP summit as efforts to continue to zero out emissions are on foot today. 3 of Asia's biggest markets, that's China, India and Indonesia, account for over 1/3 of global greenhouse gas emissions. If they achieve net zero by 2050, the world could get a fighting chance to meet the Paris Agreement goal. Let's discuss the state of energy transition in these markets. Bloomberg NEF head of APAC research, Ali Izadi, is with us. Also, our managing editor for climate and ESG Asia, David Stringer, is with us too. David, I'll start off with you. So let's start off with India, obviously a major economy in a state of transition. How would you rate it?
Morning, Heidi. Well, India, absolutely fascinating when it comes to the story of global emissions and absolutely when it comes to the story of climate action in Asia. It's the 3rd biggest emitter already. And what we see is when we look at nations who are continuing to see their emissions rise and rise significantly, India really is among the sort of leading sources of greenhouse gas pollution. If we think about what would be required for India to achieve net zero by the middle of the century, that isn't India's goal. India's goal is for 2070. But if we think, what would be required, investment alone would need to be more than $12 trillion. The majority of that are sort of about 1/3 into more renewables and grid spending, about 1/3 to electrify transport, and obviously a huge component there to clean up industry. What's driving all this is the most extraordinary increase in electricity demand. India still vastly outpacing any other big economy in terms of its consumption of energy. And until that issue is addressed, until India completes I guess that sort of industrialization, that urbanization, it's difficult to see how they start to drive those emissions down. It is adding huge amounts of renewables, but at the same time, billions and billions of dollars more coal, and potentially some gas. So a really fascinating example in this region. And really, to solve the global climate problem, we need to solve the India issue.
Ali, so when it comes to India, how does it compare with the other big markets like China and Indonesia? And how do the three markets, just relative to each other, how are they going?
So to build on David's comments earlier, if you look at global investment in energy transition, last year we tracked about $1.77 trillion worth of investment. Among all markets, China by far leads the world in energy transition investment, and it has been leading the world for over a decade. So of that 1.77 trillion invested last year, 38% was done in China, and that far exceeds China's share of global GDP. So it's about double the share of China's global GDP. For India, on the other hand, so it ranked globally 9th, which is relatively respectable. The amount of investment in India was about $31 billion, so only about 1.7% of that $1.77 trillion that I mentioned earlier. So relative to its economy size, it's still not enough, and particularly as David mentioned, we need to see a lot more investment in renewable power capacity deployment to be able to tackle the growth in electricity demand in that market. Indonesia, among these three, still lags far behind. There was only about less than $5 billion of investment in energy transition in the country last year. That doesn't even make it to the top 10 globally. If we look at our G20 zero carbon policy scoreboard, China currently leads among non-OECD members of G20, and it does get a passing grade at over 50%. India is getting close and has done some interesting things around complex auctions for renewables and also increasingly around electric vehicle adoption, but it needs to do more. Indonesia is at the bottom of the G20, ranking similarly to Saudi Arabia and Turkey.
When we started this conversation, it seems like a big if to be able to attain those goals for all three markets, right? What do we need to see in order for the Paris Agreement commitment to come to fruition?
So reducing emissions within this decade from the power sector is critical, given that the power sector already has the technologies that are cost effective for achieving peak emissions and a decline by 2030. If you look at what's happening in China, we're getting very close to that point, and the increased levels required for renewable investment is actually not that much more. In the case of India, we would have to see the annual average investment in renewables increase by almost a factor 4. It's still plausible. In the case of Indonesia, we're talking about increasing the investment in renewables relative to what got invested last year by a factor of over 50 times. That seems huge, but if I may give an optimistic note at the end, if you look at what some of its neighbors, for example, what Vietnam and Cambodia have achieved with targeted policy interventions, it is plausible for Indonesia to also start to get on track if it's willing to start reforming its energy market.
David, how do you think we're setting up for the COP summit?
Quite well, as we move towards COP in November, and don't forget a huge event just ahead of that, the US election, and don't discount how that will feed into those discussions. But we're very much getting towards a moment where those 2030 goals, the sort of interim step towards those net zero by mid-century, are coming into view. And it really is a time when we're going to see some very hard reflection and hard assessments of how are countries, how are industries making progress. And I think for the majority of them, the answer is yes, they're making some progress, but simply not enough and not fast enough.
Bloomberg NEF Head of APAC Research Ali Izadi and Managing Editor for Climate and ESG Asia David Stringer. Good to have you both. We have more ahead on the Asia trade. This is Bloomberg. And Haidi, the countdown is on for the presidential debate. We are expecting Kamala Harris and Donald Trump to take the stage. It could be just a single debate in this campaign season before the vote in less than 2 months. So we're not surprised that we're really watching some of these sectors very closely, the likes of perhaps some of those crypto companies, because we know that Donald Trump has been a very vocal advocate for the sector. We're also watching, of course, EV sectors, electrification, and of course, China exposed stocks as well.
Yeah, some of the exposure when it comes to China directly or indirectly, although it's questionable how much further downside we could see for China-related equities at this point. If you take a look at the sort of assessed impact on Asian markets, it's interesting. We heard from analyst out of Nomura saying that Trump winning the US election will be a net negative for Asian stocks. They're focusing on relative value, domestic sectors outperforming the export-led ones, so India and Malaysia over Taiwan and Hong Kong/Greater China. And they do expect a second Trump term would focus on those tariffs and extending the expiring provisions of the 2017 tax cuts and the Jobs Act as well. And of course, a broader issue of whether fiscal policy from either side would continue to drive the resurgence of inflation. That would certainly complicate things for the Fed. Fiscal expansion is really potentially on the ticket for both candidates, and that could mean a revival of higher interest rates. The boost from growth in business tax cuts could be weighed against the headwinds of policy uncertainty as well. So Autos advisors saying that whoever wins is still going to make regional security a priority. So that's sort of a win-win for defence. So watching for defence stocks in particular, and the sort of tech stocks, chip makers in Asia are certainly one major sector to watch. But all of this, of course, hopefully we get some policy details, particularly out of Kamala Harris. That's going to be what voters are looking for, what investors are going to be looking for, given that perhaps Donald Trump, after his term, is a bit more of a known entity, if you will. But do stay with us for all of that. Our special coverage of the US presidential debate is up next. This is Bloomberg.